Good morning, everybody. Welcome to the Flow Show. Where are we? Thursday, the 5th of February. And we're getting our data back at last. All the shenanigans of the shutdown are over. We've got dates for JOLTS, NFP, and all the rest, which I'll go over in the news run shortly. Good morning, Mr. K.
Good morning, Ryan. Good morning, everybody. Yeah, are we happy or what?
Well, don't know about happy. Are we ever happy unless we're in profit?
The question of the day is, Ryan, do you feel poorer with the sterling getting hit the way it was yesterday and this morning?
Do I feel more poorer, you mean? Or we're always feeling poor over here.
Poorer.
Poorer, yeah, exactly. Right. Let's get going. Right, we had another report out of Japan. The LDP, Takeichi's LDP, are looking or going to win a big majority by a large margin, according to TBS. So that's now two reports this week saying that she's on course to get that big majority, which now tells us where the potentially bigger price risk is. The market will be looking that way. So if it doesn't get that result, then we could see a decent bit of yen strengthening. The risk is still binary, though. If she doesn't get the majority, we could see the yen strengthening. If she does get the majority, then we could see yen weakening significantly, as it would mean it's easier for her to pass all her big fiscal spending proposals. So this weekend could be very spicy for the yen one way or another. As you may have seen, yen pairs have been climbing again, dollar yen through 157. The yen index is continuing to pull back, a bit of a chunky dip from yesterday, 74.02 from 74.43. So we're creeping towards that 74 figure and maybe going under it. A bit of data out of the Germans this morning. We had factory orders. This was for December, and a healthy looking 7.8%. Was expected to dip 1.8%. So a bit of a year-end flourish, shall we say, there. Workday adjusted year-on-year orders came in up 13% versus 1.2% expected, and a prior 10.6%. We've already seen that data so far this January have not been all that much better, shall we say, or it's been worse. In fact, we saw from the PMIs that it's been worse, although they're still in expansion. We also got some construction PMI data out, which, again, looking at Germany, they went from a positive 50.3 to a negative 44.7, i.e. contraction 44.7. All these numbers pretty much going backwards, all still well in contractionary territory. The UK, though, they had a decent jump up to 46.4, so things were less crappy in the UK, but still in contraction. Right, something that's been bubbling and had been keeping half an eye on it during this week, but it hadn't been amounting to much market-wise, but that took off yesterday. So this stuff that's going on in the UK between Starmer and his pal Mandelson, who was mates with Epstein, that all really kicked off yesterday over what Starmer knew and didn't know, because for those that aren't in the UK, he appointed this bloke who's an ex-Labour MP and whatnot. He appointed him as the US ambassador, and he was very pally with Epstein. It's come to light that he was allegedly, talking about sensitive financial information with Epstein, which is obviously a big no-no. So that's all kicked off. Starmer trying to wiggle his way out of it. His own MPs are not happy with him. It is brewing that he could be in danger of losing the PMship. But as much as that's the case, everyone's looking at May still as a potential time when that might happen. But you never know in politics. Things can move pretty quickly. Yesterday afternoon was probably the first time the market sat up and taken notice. We were looking at Euro sterling yesterday, it was heading towards the 86 figure, and as you can see, it's now ramped much higher. We've seen a move in gilts as well yesterday and particularly this morning. So this is not looking good for Starmer, and the market is now focusing on it as well. So we need to keep an eye on that political mess. I don't think Starmer potentially goes in this instant unless they really want to oust him and some other news comes out. So he probably will survive, but the noose is definitely hovering around his neck. So we'll keep an eye on that situation. If Starmer does go, it's going to be probably wildly negative for the pound and the UK, because the prospect of someone coming in who's far more leaning to the left is high. And that also means that Reeves could be out again for someone far more tougher, shall we say, left leaning. It won't be good news. So be warned, that's where we're at. Kay, what are you making of this UK mess? The usual.
Yeah, when the market wakes up, it wakes up, and it's usually a bit emotional towards the sterling. I mean, that was a quick drop in the pound. Yeah, we've been talking about that, and then actually, I was a little surprised it took that long, and that's why I been taken by surprise as well yesterday, and I didn't trade any of it. Yeah, but I do have a question though. What happens if so Starmer goes, somebody left of the left comes in, Sterling got hammered a bit more, and then in May we all of a sudden have like reform. Well, basically, well, I'm not saying having a majority or whatever or so, but ramps up in the polls. What's going to be the result of that then? Is the market going to say, oh, more political trouble, continue to sell the pound, or are we going to see a bit of a revival? It's a real question I have, because I don't know the answer to that.
Yeah, well, I think we've got to take the line that any increase in political uncertainty isn't good news.
Yeah, what I would say, yeah.
And it's not as if they can lose their majority unless, it's because half of the elections have been cancelled anyway, or will be cancelled. So it's I don't think the majority is at risk. So as long as they keep that, then they're in play. It's no done deal that we get a worse PM than Starmer, i.e. a more left-leaning one, because there'll be plenty of runners in the mix, and we might just get Starmer Mark II, someone sort of from his camp. But looking purely from the worst case scenario, it would be someone like Andy Burnham coming in, like Torsten Bell coming in as Chancellor. That would be the real negative. So yeah, I think this is just some mild, I think, market attention, but it as we know in politics, it can be a slow burner. So I think it'll probably get over this hump. The market will forget about it. We'll get to May, as you say. If it's bad news for Labour, the market will react to that. But then that will probably die down until, because obviously there's still a few years till the next election. But May is probably when the leadership thing comes into focus if Labour do badly, irrespective of what Reform does. If Labour do badly in May, then there's going to be big questions asked, and that's when we might get people poking their head above the parapet to challenge Starmer. But then we'll go through the same old motions, no confidence votes, letters in, all that sort of palaver. So as usual, it'll be a long, drawn-out affair.
Okay, yeah, cheers, mate. I also think that the move that we saw yesterday and overnight is the market, because sterling was doing pretty well. I guess there were a few longs sterling in the market as well, and that's why we saw such a reaction, right? We're on a very decent level, as we said, on the euro sterling, and also in the cable somewhere around that 137.25, and all of a sudden, I guess those who were long sterling were pushed out of the door, and that's where the acceleration came from.
Yeah, exactly. Because this move has come while euro dollar has done nothing. So that's how we can tell that it's a pound move more than a euro move. because euro dollar's been absolutely glued around that figure, largely possibly in part because of a big option expiring there today. But we also got the ECB and the BOE coming up, so low risk for any actual moves or anything there, but the market will still be wary of those things. But we'll cover those shortly. Let's crack on with the rest of the headlines. We did get some data out of the of the USA yesterday. We got, excuse me, ADP. If I can find it, where we're going down here. There we go, 1315, which came in a little bit softer than expected, 22,000, and a small revision down on last month as well. Still within the ballpark, maybe on the low side. What we won't want to see is these numbers, continuing or forming a trend lower, because then we will start going negative. There's not much room for error before we start going negative in these numbers. What that means for the NFP next week, we'll have to wait and see. But until then, that's what the market's got. Not a huge reaction on that over that when it happened, but still something to keep an eye on. Canada Services PMI dipped further into contraction, 45.8. The final US S&P Global PMI ticked up to 52.7, 52.5. The ISM posted a beat of expectations, roughly matching last month, although that was revised down a touch. Bit mixed in the details. Employment pulled back a bit, just hovering above the contraction line. Prices paid ticked up to 66.6. Here we are, the number of the beast. New orders, though, dipped back to 53.1. So overall, still a number that suggests that there's no big worries going on there coming into the new year. Fed Cook, she's been absent for a while, given all the her court case going on, but she's back on the wires, saying current policy is mildly restrictive. Says it's right time to sit back and wait. She did have some more hawkish sounding comments, saying that the Fed are focused on returning inflation to 2%, but the risks are tilted to the upside. Says the priority is bringing inflation back to 2% until there is stronger evidence it is moving there. Inflation has stalled stubbornly above target and risks remain skewed towards higher inflation. Says core PCE is way above the Fed target. The US has set its quarterly refunding, got a few eyeballs given the old Sell America theme that's been bandied around. That came in unchanged at 125 billion as expected. I should say as expected, all the breakdown was as expected as well. We are getting data back. JOLTS is on for today. So we're getting that today. 1500, I think, is the usual time. I think, let me just double check, see if this calendar's updated. Yeah, there we go. So that's coming today. NFP is coming next week on the 11th. CPI, which was supposed to come next Wednesday on the 11th, is now booked for next Friday on the 13th. So that's when we'll be getting that. So busy week for data next week, which coming after the NFP. Usually it's a bit of a quiet one, so we look forward to that because that was when we will get the NFP. I'll have the competition up and running maybe today if I can get around to it in time. Right, Treasury Secretary Besant was up before the beaks. He says that he always supports a strong dollar policy. Also speaking about this 10% credit card cap, that looks like it's getting watered down because he says the cap for 1 year would help allow Americans to recover from past inflation. So this might now be a bit of a temporary cap rather than something longer lasting. He said he was mistaken when saying tariffs could be inflationary, even though there's tons of inflation in the US at the moment. He says he's still seeing a very good flow of foreign funds into US treasuries and a massive flow into US equities. Mr. Trump and Mr. Xi had a conference call yesterday, according to media that popped up out of nowhere. Trump saying that China is potentially going to purchase more agricultural products, maybe lifting the soybean count to 20 million tons for the current season. From the Xi side, he said that the issue of Taiwan is the most important for China-US ties, and the US should deal with Taiwan arms sales issue carefully. So the usual veiled warnings in there. Trump also saying that, repeating that he may go out there in April. You don't get a Trump-Xi meeting call news without getting a Xi Putin set of news coming out. So after all those Trump phone calls and whatnot, Xi apparently invited Putin to visit China in the first half of this year, which Putin accepted. He always likes to do this straight after he's had a thing with Trump. He makes sure that he has a thing with Putin as well. Putin and Xi agreed to further develop trade, including energy, and says we will act carefully and responsibly after the new START deal expires tomorrow, i.e. today. That's the nuclear treaty thing that the US signed with Russia. That has actually expired. So we'll have to see what happens with that one. And this morning, Wall Street Journal reporting a piece saying that the Trump admin is going to look to make it easier to fire 50,000 federal workers. Now, the headline is a bit more incendiary than the details. They are looking to maybe change rules, put in new rules that could happen today, which would create a government employee category that offers fewer job protections. There's a lot of heavy protections for what they're calling career federal workers, much harder to fire and discipline and whatnot. So they're going to try and ease up those rules. So it's not Trump's looking to fire 50,000 people. He just might make it easier to do so, or however many he wants. And that's that. Kay, any pickings out of that lot? That Trump G call came out of the blue, but nothing really of note from it.
The usual victory lap from Trump. His good mate Xi preparing a visit, but then we quite quickly saw what the real focal points are for Xi. That is still the cooperation with Russia and stay away from Taiwan. What may follow could be interesting because we know that the US has agreed on a arms sale to Taiwan. He hasn't said anything about it unless I missed it, but that may be a bit coming on the be a bit at risk perhaps after that call. I don't know. I mean, Trump still seems very eager to keep China on his side, or at least don't frown them too much. Could that be one to monitor, which could in turn be a bit naughty for geopolitics again? Maybe not in the immediate, but over time. For the rest, as we've been talking already about, I still remain on the side that Takaichi is going to get it. Landslide victory is very possible. Interesting comment there was from one of the mega banks in who is it? Mizuho again. They've been pretty vocal lately. Yeah, here we go. Mizuho strategist sees the end of the Japanese debt buyer strike after the election. So, if you want to listen to what the Japanese are saying, we could be in for a little bit of an earlier pickup in yen, perhaps, if the market buys Takaichi's whole structure of what he wants to do. For me, it was like still a bit of a wait. The first, as I said, I thought yen may make a comeback second half of the year, but if really she gets a victory and manages to get investors on board of all her plans, we may perhaps see it a little bit earlier. But still, I mean, for the time being, and the market is clearly still trading the fiscal looseness on the back of her getting a victory. So, but always worth keeping an eye on who's getting back into Japanese JGBs, right? If we get a hint of the insurers, GPIF getting back, that would somewhere start to support yen perhaps a bit more. So yeah, eyes open, and especially next week. Also think that we will be in heightened alert for interventions, especially if we see a kind of post BOJ reaction or post Takaichi's election reaction where the market takes the yen another leg lower. We will be in intervention territory.
Yeah, yeah. I saw you went on some options. I'm trying to I'm trying to time it.
Yeah, I know.
Um,
I was already. I was. That's the problem with having been a spot trader for 40 years, is once you have an idea, you're pretty eager to press the button. But
yeah,
I managed to hold back for at least another couple of days. Yeah, today, but I just did half of it, just in case, we've got US data, got the Japanese election, and just in case we walk in on our Monday morning, and things would already have heated up, and they would already be intervening, because I think they will be very close to the buttons right after the election results roll in, which are our Sunday afternoon. And I think we will, if she gets the landslide victory, we will know when the markets open. I think, and then we may be straight away into intervention territory. Who knows?
yeah, yeah. I'm definitely going to put something on before the weekend. But yeah, I'm trying to be dick for a tick and just
Yeah,
squeeze a
but
few pips out.
but you're right for now. It just goes on. I mean, if you look at the yen crosses, they are still beat despite the dollar catching a bit elsewhere. As well, you look at euro yen, we're still trading not at all-time highs, but at highs of the past of the post rate checks, let's say. Even with the sterling losing a truckload overnight, we're still trading at what, 213, which is still high versus the rate checks as well. And just name it, it's not only dollar yen, it's all the yen pairs are still supported. So you may as well take it until the 11th hour, and then see if you can get in maybe tomorrow, mate. Who knows?
Yeah,
I mean, if you want to do options, I'd say, and that's why I did only half, because I want to be somewhere a bit patient as well. But
yeah.
I was not going to wait until after the weekend, because that may be just that
Oh
little
no,
bit
absolutely.
too long.
Yeah, absolutely, absolutely. You got to if you're going to do them, you got to do them this week to cover through. And like you say, if you can get a week on it, you cover the US data as well, just in case there's any wobbles in that one. But yeah, I've got the itch. I'm trying to sit on my hands, but I'll probably go at some point. Like you, just put a bit on, just so I've got some skin in the game, and then
Yeah.
that takes
What
the
do we have?
FOMO pressure off.
Yeah. What do we have today? We have claims. Jolts. Oh, Jolts. Yeah, Jolts have been delayed 1 day, so they come out today. That's about
Yeah.
it on the dollar side of things. If we take away, of course, ECB and Bank of England, we're just talking about the yen in this case.
Yeah. Now, actually, we might get something. I might wait for jolts because there could be a wobbler here because of the storms last week. Because it's obviously weekly data. If people couldn't file claims or anything, we could see that dropping down. So if we get an out 150 claims or something, and the dollar rallies and that, I think I might use that to tap it. I might tap it for a little short in spot just on the data anyway in a dollar pair. But yeah, there is some skew risk for this initial jobless claims, which the market should be aware of. But algo's got to algo, so just be prepared for that one later as well. Right, let's get on to the central banks. First up is the BOE. Rates expected to stay unchanged, 3.75%. The vote count is expected for a 7-2, that's 7 unchanged, and 2 voting for a cut. I think, as usual, there's probably a risk for slightly more dovish vote. I'm not sure if it goes as much as 5-4 for unchanged, but I think a 6-3 is possible, which will just add a little bit more of a dovish tilt to things. It is a monetary policy report meeting, so updated forecasts and a press conference 30 minutes later, as you can see there, 12:30, when we get Bailey doing his waffle. Also get Challenger job cuts at the same time as well, so just keep an eye on that for a bit of a jobs note. I really don't know what these clowns are going to divvy up today. I can see Bailey trying to copy Powell and walk a fine line. He'll do it in a complex and stupid way that will probably confuse everyone. But yeah, I think he's going to keep the message pretty neutral. You know, risks on both sides can go with rates either way, that sort of thing. But any changes to that is probably going to be a bit of a power mover. What are your thoughts, Kay?
Yeah, I tend to agree. But I wouldn't rule out a bit of a slightly dovish slant to the whole thing. Yeah, much more I can't really say. Is he going to be cautious with his wording just because of the political mess? It's not the role of a central banker, but who knows, right? So maybe looking at that just to make sure not to go overly dovish or so, not to give the pound another serious, because if they go dovish, I think the market is going to grab the bone with both hands and slap the sterling again, right?
Yeah.
Yeah, I'd say I would think though there may be a bit of a dovish slant coming. Yeah, we had like a bit of growth, but it's anemic still. Yeah, the sticky inflation, but that's something that doesn't necessarily support a currency. So yeah,
I mean, the data's been mildly better than when they
mm,
last cut. You know, retail sales, we had a good period into the end of the year. The
mm,
PMIs have picked up. Yeah, inflation's still being sticky. He's got to. They obviously want to get rates down. That's the be all end all. They still think that inflation's going to come down in towards the second half of
mm.
this year. So that message is still being played. But I don't see any reason from the data why they need to be a bit more dovish.
No, possible. Unemployment just hovering above 5%, but that's not abnormal. Yeah, current account a bit negative. I'm just looking through a few data
Yeah.
while we're talking about that. Yeah, but the rest it's all like flat to just slightly positive. Yeah, inflation a bit sticky. Yeah, you know what? Maybe it's just an autopilot meeting as ECB will be. But
Yeah.
he's going to have to walk a bit both sides as well, right?
Yeah, exactly. And there's the old adage that if any time Bailey opens his mouth, the pound drops. So don't forget that. Don't forget
Yeah,
that
but
one as well.
hmm,
But yeah,
in
well, it'll
20
be what it'll be. It could be
yeah,
dovish. It might not be dovish. We'll
yeah, in
find out.
2025 he had a hat trick of meetings where he actually supported the pound, and that was a bit of a new feat that must have surprised a lot of traders then.
Yeah, probably surprised himself as well. But anyway, right, let's move away from those clowns onto the ECB. Again, no expectations or thoughts about changing the rates. ECB probably a bit of another victory lap meeting where they say rates are in a nice place, inflation's in a nice place, everyone's in a nice place, and the economy is resilient. If you like a 0 point nothing and call that resilient, that's down to you, but there you go. Obviously, we get the presser. Probably some chatter, I think, around the replacements. You know, people are circling the ring for replacing her. Obviously, we've got the De Guindos thing going on as well. He's going to be out soon enough. And then we'll see if Wojcik comes in and can speak a bit more than he does. Is there anywhere we might get something that will move the market, Kay?
Well, there's two possibilities. There's of course the question about euro dollar rose above 120 on those Trump comments. How are you feeling about that? She's probably going to say, we don't really target exchange rate, and she might actually say they're still in a good place. not giving anything away that about that 120, which we already talked about so often that it should not be any colored line on the ECB scheme right now. There's no way that 120 is a level that is overdone or whatever. For a central bank, not for markets is a different thing. Your currencies move, but for the central bank, it shouldn't be of any importance at all. And then there's the other thing that inflation slipped. But she's probably going to then go back to her sheets and go like, listen to what we said. It's 2% or just below. Well, we are at 2% or just below. Just same player shoots again, and nothing. I really don't see anything that she should say to alarm any side. So the inflation slipping would be a little negative to the euro, but then not commenting on any levels could be a little bit positive. So that means that we're probably going to move 10 pips up and 10 pips down and then come back to where we were before.
Yeah, I agree with you. What you said in the chat room, that if she, I wouldn't say gives it the green light, but if she isn't bothered about that move to 120, we'd probably see a bit of an algo spike on that.
Yeah.
Whether it's enough to kick us out this range that we're in is another question. But I think that maybe the other slight risk is that really she could turn up, say nothing's changed, got nothing to say, thank you very much, see you next meeting. But because she's got to fill the airtime and because she's got to be heard, I can see a lot of waffling going on. And maybe she just says something where she didn't need to say something and we get a move. Don't ask me what that'll be, but that sort of thing.
She's been pretty, how should I say, pretty good in direct questions about interest rates and FX levels to avoid them or to explain them in a way that she doesn't give away too much. It would be a little bit of a surprise, but okay, it's not a zero risk, of course, or a 0% possibility. There's always a possibility. She says like, well, you know what? I mean, no problem at all, and then we will see that spike.
Yeah, if she starts waffling on about our monetary policy is like water flowing up a mountain or some airy fairy bollocks, then I'm going down the pub. I can give you that.
Oh yeah.
So other than that,
climate question.
Yeah, exactly. And hopefully an appearance from Mr. Michael Brown. He's definitely going to make an appearance today. I can tell you that. So be watching my Twitter later on. I've got something up my sleeve for that one. But anyway, and obviously what she's wearing, brooches, scarves, colours, tan, that's going to be the main focus today. Right, let's get away from all that rubbish. So quick look at dollar yen. We are above 157. We're already building a bit of a base there, as you can see. So that's giving it the thing to kick it on. We spent most of yesterday below it, banging our head on it, but we've gone through now. I think, Kay, we're probably getting into that part of the show where you've got to be careful with your coloured lines on the charts, because if this is going to go up in anticipation of the election, it's going to go up whatever's on our screen.
Yeah, absolutely. And for as long as we don't get any officials coming on warning and or doing rate checks, it's probably going to go. And yeah,
just grind.
Why not, tap 160 right after the elections, or even tomorrow if we don't get any wobbles on US data. Maybe even tomorrow we are going to close in on that 160, where I think they may actually do a few rate checks. I think they've been missing their window again. If you look at the officials, they came in the second time when we were when we saw that little bounce up to 155. They knocked it down again. Why let it go up to 157.5 again? And I always wonder. I mean, it doesn't cost them any intervention money to pick up the phone and do another rate check. Why not keep the market contained? I don't. Sometimes I don't get it. There was it was a relatively easy way and a cheap way to keep the market contained. But now they're giving the green light again to buy everything against the yen, and that's the problem. with the yen right now is not only dollar yen, it's everything against the yen.
Yeah, I mean, I think one of the reasons is it's, as I've been saying, it's diminishing returns. If they do a rate check, I doubt we'll get this move. We'll probably get maybe three quarters of that, maybe half of that move, because the market will be okay. Rate check, you did one before, you've done it again. You know, what you going to do? Are you actually going to put your money where your mouth is? Because you can't keep doing rate checks every 5 minutes. It's not going to work. The market's going to just buy the dip on that. And I think they'll save it to see what happens on the election. I actually think we'll be in a similar position to the BOJ, where it started taking off after UAID had finished talking, and then they made a move. And I think if it's going stronger than that, I think we can forget a rate check and it will be straightforward intervention. I think that's
what I mean by missing their opportunity is rate checks reduce the numbers of people wanting to trade against it. Here and now, people feel like kind of confident. Whether it is justified or not in the end, we will know. But in the meantime, we rallied about 500 pips from that 152 without anything more. On the contrary, Besson in the meantime said absolutely not intervene. Katayama went quiet. There was that little bit of a slip up, whether it's the lost in translation or Takaichi badly formulated her thoughts. But if you step in, I mean, not real interventions, but if you step in, even verbally is not enough. There you're right. But if you step in, like doing a few rate checks, you reduce the numbers of the people wanting to counter trade you, and that's where I think they missed a little bit of an opportunity to keep the market and a number of players on their toes.
Yeah, no, it could be right. It could be right. It's amazing. It has done 500 pips in
Crazy,
all those
right?
few days, and you almost don't realise it until you
No.
look at it like that.
End of February, end of January, we're trading at 152. We're still only the start of February, and we're trading 157. In any other scenario, that would have been a pretty serious move, right?
Yeah, absolutely. Right, well, let's see what happens. I'm getting even more the twitch to put something on. I might have to do something after we finish the show. I'm getting a real twitch. Right, sorry, back to euro dollar, and we are a bit glued at the moment. Those of you in the chat room will know we've got just under 4 billion in options expiring at the 118 figure. Given that the market likes to do nothing going into an ECB meeting, we're probably going to be turning around that. So keep an eye on that one. If we can't shift out of that pattern by the end of the ECB meeting, then we'll obviously probably have about half hour by the time she finishes until that expiry. Just keep an eye on what other dollar pairs are doing. If we're glued around that 118, but cables shifting, dollar yen shifting, Aussie dollars shifting, keep an eye for maybe a bit of a catch-up trade once those expiries come off. But otherwise, we're going to need a bit of a catalyst to kick us out of this range, mate.
Oh yeah, yeah. Looking at the way the dollar trades in general, I think we are going to slip toward. There's a fair chance we slip towards that 117.45-ish. I have it too, just because we couldn't hold that 118.30s. I think for the euro dollar to start looking up again, that's the level. Those 118.30s, recapture it, hold it, and then we are going to talk differently, I think. But for as long as it doesn't happen, this slow slippery slope is to me, still the direction it looks for.
Yeah, I agree with that. Right, I'm going to knock it over, mate.
Yeah, I'm going to talk about something completely different for a change, and something
Wine?
Sorry?
Wine?
I could do, but nah, that's we wouldn't have enough with one flow show if I start to talk about wine, mate. No, I'm going to show you the dollar stocky, and then for a couple of reasons, because yesterday it's been brought up already in our chat room as well, um, by one of our new members there, and we had those Swedish Riksbank minutes. We've been talking about it. They showed nothing hawkish at all. And what happened here is that dollar stocky, which has been like really offered for a quite some time there. If you look, this is end of November until the end of January. Well, starting to poke its head back above some of those levels, and I think it's quite interesting because if you think about how the dollar behaves right now, and if you think about the Riksbank, you think about where their interest rates are, 1.75%, which is one of the lowest ones in the in let's say the G11, barring Japan and the SMB, of course, and you add on top then that Sweden, that Riksbank report where they are relatively dovish. This could be one for as long as we hold above 894, 892-ish. This could be one that has a few legs, perhaps, to get back up into the 9.10, 9, yeah, somewhere around there, 10.15-ish or so. I'm just yesterday, and thanks, Josh, for bringing that up, by the way. He's in our room, and we spoke about it. And it just looks like this could be in for a bit more, call it a retracement, or just, maybe not a reversal, but at least a retracement for as long as the dollar is doing okay. And also, if you look at that risk, we saw those tech stocks being sold. S&P is actually doing still all right. But also the Dow coming back down. There's a little bit of risk of going on, and usually the Scandies don't really like the risk of play, but there are a few. None of them is like a huge a driver. I'm not saying this is going back to 940, but just a bit of a this is something that yesterday was maturing, and I think on the break that we had then, it looks quite okay for now, for maybe a little bit of a push higher. So hadn't looked at it for quite a while, but I thought this was an interesting one. Picking it up again, this was yeah, kind of an interesting one. Just wanted to keep it that way and show the people for a change something different than what we usually would be looking at. We have to talk again about those metals, right? Because the sell-off that we had, and I'm going to just go on a bit of a shorter time frame. The sell-off that we had in Asia in silver was pretty strong. It actually lost nearly 20% at some stage. Um, yeah, the long or the range that is trying to develop is still intact, but I think the rejection that we had yesterday, just above that line here. Okay, we went like $2 higher, but as I already showed on my update, it's so hard to pinpoint exact levels in silver, especially right now. But then the rejection again of this here, the retest that we had afterwards, and then the sell-off in Asia. I think this zone here now is a bit of a bit of a level that we are going to need to pay attention to, and then also the middle of the that range here, 85, 86 seems to be a bit of a hinge, a bit of a booster. Anytime it goes up or below that level, it's accelerating to a certain extent. Okay, so these are a couple of levels on the top side that we need to pay attention to. Mm, I still think we are going to try to find the range. If you go back onto a bit more medium term, you will see that if it starts to break below that 71.69 here, there could be a bit of a psychological gap opening there, which would then lead us back into perhaps this zone that we traded before 45.55. But for as long as it holds, I think we can look at it a little bit in the same way that we look at gold, albeit a much wider range, because the volatility is so much higher than we see in silver than compared to gold, for instance. Gold, as we said yesterday, let's see if that 51 caps. It did cap, and so I think we are in this kind of a range. Did I not put the range on there? No, I didn't. Wow, I should. The 44.51, and I think it's I'm going to stick it on soon. And really, that's going to be the decision maker, either side of that, 51.44. And in between, we've seen a bit of stop and go around 49.35.50. When it went below, then we went to see the next level around 48.30. The overshoot. The problem is always these overshoots on metals. You can hardly stick a real level on it. But I would say here's a bit of confluence. If we continue to go lower, there's a bit of confluence around 47.5 and more confluence around 45.5. These are two levels that I'm keeping a close eye on if we would trade it lower. If we start to bounce, I'd say again 49.35.50. This top line here, I'm probably going to take it out very soon because it's been traversed so easily of late. It only worked on until we had that first retest of the 49.40 from where we bounced and then crapped down below. But again, there's a few levels. If for the people in our room just watch my update, it's the levels are all up there. That we have to watch in between. But again, in the bigger picture, I think we are trying to see what's going to happen over time in this broader zone. Okay. I showed you where the pivot was, right? On silver, and I think gold is around 47.5, Brand. Let's look at the cable because did you show the euro sterling? You did, right, Ryan?
Yeah, just briefly, yeah.
Yeah. So yesterday we had a retest of that here, that 137 137 and a quarter 30, and then all of a sudden in the afternoon the thing after the PMQs cable started to drop away. That's a market that's typically a bit emotional always when it starts to trade cable on the short side and especially on the short side. So that was a really rapid drop. So it lost a bit of its shine. I think the level that we need to watch, there's two levels that we need to watch on the top side this time, and that's, or actually three. We have a bit of a broken trend line here around 136 and a quarter. We have 136, but that's too close for comfort, right? We are actually trading bang on the 136 right now. But I would say again, because this has been a level that's always showed a bit of direction, barring a couple of times here. But it's always shown a bit of direction, 136, 65, 75. That's one that we should be looking at for resistance if it goes back up there. And on the underside, if we can't make it back up there, or if we find resistance before more political headlines, Bank of England going softish, the zone here below, we've been talking about that in our room as well, is going to be somewhere 135.35, 135.50. I think is going to be an interesting zone to monitor if the cable would come closer to that level. Okay, so that's what I think about the cable going on. Euro dollar, it's the ECB. I really don't think it's giving us a lot, but this 45, 65, 45, 70 zone is relatively important in my opinion. Aussie and Kiwi lastly, and then I'm giving it back on the 69, 60, 65 zone in the Aussie. We're bouncing from it again. We had a quick look at 60 here, and we're bouncing from it again. It's still going to be an important level, so we will see what's happening. I think now we leave that over to what's happening on reschedule. We leave that over to what's happening on the dollar rather than the effect of the RBA. That for the Aussie dollar at least, because I think the market is going to trade more dollars than really the Aussie side of the Aussie dollar. But yeah, so I think again keep an eye on what's happening 69.60 below. We could have another look at 69.30 or 69 the figure. If we come out of this week and it holds above, I think that's going to be positive. Kiwi, interesting one as well. Is this a bullish wedge, or is it just a question of not holding rallies again? So I also think that the US data will show us what we need to do with the Kiwi. 60 is a bit of a psychological level. We're turning around again, but I think 59.70, 59.70, 75 is going to be important going forward. If we move below, that's not going to have a very good look for the Kiwi. If we hold above 60, then we're probably going to go back up to like 60.40 or so. But it's an interesting little wedge that we are monitoring here. And the levels are relatively nicely defined as well, with some the help of some fibs. And with that, Ryan, back over to you, mate.
Thank you very much, good sir. And quite a bit to get through today, and lots coming up. So take care trading through the rest of the day. Hope you have a good one. Don't forget to catch us on Face later on, or else we will see you tomorrow and we'll go through what happened at the BOE, ECB, and all the rest of it. Have a great day, everybody. See you tomorrow.